Good day, I'm Martin Gagel with Market Radius Research. It's Tuesday, March the 8th, and we've got a quick update with CEO Dave Harper of Geodrill. Geodrill is a drilling services company for the mining industry with a leading market position in Ghana, Burkina Faso, the Ivory Coast, and Mali, and it is expanding its presence into Egypt and Peru. Geodrill just released record 2021 financial results with record revenues and profitability. Dave is here to discuss the results from 2021 and his outlook into 2022. Everyone, please remember that this is neither recommendation nor investment advice. We're here to learn about Geodrill. Dave, thanks for joining us, and please give us a quick overview on the quarter.
Good afternoon, Martin, and thanks very much for the intro. I think you've pretty much covered the background of the company in your introduction. As you were just saying, yesterday the company reported its 2021 Q4 and year-end financial results. I'm going to run you through those right now. This is our disclaimer slide. Getting straight into it, we capped off fiscal 2021 with outstanding momentum, delivering on all key financial metrics and strengthening our balance sheet. We generated record revenues of which was a 40% year-over-year increase compared to fiscal 2020. We also generated record EBITDA and record net income. And as a result of these three record beats, we achieved for our investors a return on capital employed of 22% and a return on equity of 16%. This was up from 14% and 10% respectively a year ago. Geodrill's balance sheet also remains one of our differentiating advantages, with net tangible book value up 18%, total shareholder equity $87.5 million, that's up 20%. We have net cash of $2.4 million, and that's after decreasing debt by $3.4 million, and we delivered a 2-cent Canadian dividend throughout the year. The bottom line is that our strong balance sheet with low leverage well positions us for future organic growth. This slide is our fiscal year 2021 on the right-hand side, and you can also see how we compared favorably to that by looking to the left to see the 4 preceding fiscal years. Revenue, USD 115.2 million USD. That is a year-over-year increase of 40% and our best ever result. EBITDA 29.5 million USD, or 26% of revenue, and this is a year-over-year increase of 55%, also our best ever. And net income 14 million USD, that's 31 cents US per share, a year-over-year increase of 88%, and again our best ever.
So what was driving the growth so much in 2021?
Well, there was some pent-up demand. If we look at 2020, we hit the ground with our feet running right from January. We had an extremely strong, you may recall, Q4 in 2020, and whereas we would normally shut down for the Christmas holiday season, we actually kept drilling through. And this was because, if you recall, we basically came through the year of 2020 with COVID and one thing or another. Coming out of it, gold peaked in August at $2,078, and so a lot of money was raised, and that money needed to be put to work. And so I would summarize it by saying there was some pent-up demand. So the run rate as we began 2021 was extremely strong. And this did not wane until wet season. So we had the first half of the year was extremely strong. And one thing that Geodrill has managed to do very successfully, I believe, is maintain our margin at the same time as revenues grow. And normally what happens is, as revenue grows and you concede some margin. I think one thing that Geodrill's been particularly efficient at is maintaining that margin.
Yeah, you had good operating leverage where your SG&A declined, I think, from 12% of revenues down to 10%. There was a tiny bit of margin on a gross margin squeeze. I believe you lost 1 percentage point, but that was offset by 40% revenue growth, which would kind of make sense when your revenue grows that much. So the net gross profit dollars increased substantially year over year.
Oh, they did. They went up 40% year over year. Our EBITDA went up 55%. Net earnings went up 88%. So all in all, it was a great year. And
part of it, you were saying pent-up demand. 2020, it seems so long ago now, but that was the COVID year. So really, a lot of business didn't get done in 2020 because of COVID. Everything slowed down, and then part of that it got pushed into 2021.
It did, yeah. So as we entered the year, following coming off a very strong, in fact, our strongest ever Q4 in 2020. The run rate was extremely strong as we exited December and entered January. This is unusual because normally January is a quiet month for us. February things start to pick up, and by March we're doing our best work. And this is where the year was a little peculiar. In Q2, we normally do our best work, but actually what had happened through this particular year is we plateaued in our revenues in March, went flat through April, and then started to taper off in May, June. End result was the H1 was a record result. As we exited H1, we'd clocked up already north of $60 million USD. The back half of the year was a different story. So in Q3, what typically happens is we enter the wet season, which is our seasonally low quarter. But it was actually a reasonable quarter for us. And then we entered, as we exited Q3, we entered Q4, which was a year-over-year improvement of about 8%. All in all, across the year, across the 4 quarters, we put in a stellar result. We don't really measure things. I never look at things in quarters because things don't go up in a straight line. But you've got to look at the starting point and the end result. And I think by and large we did very well.
All right. And yeah, it's solid quarter, your best ever, and a big up from the prior year. What kind of revenue growth should we be expecting for 2022? Are we looking at the same kind of growth or a little more kind of normalized?
No, I think it'll be more normalized. We always like to underpromise. I think picking a range, where do I think we will land for this current year? Well, I think if we were to be looking at things conservatively, we could say somewhere between 10 to 15% range in terms of revenue growth.
Yeah,
that should put us around somewhere around 130 million. Do the math. And with the challenge, as you're growing, is to maintain that same EBITDA margin. And this is where I think we will be particularly successful. At this point in time, I would say that if we grow our revenues by 10 to 15%, then we will move the EBITDA needle in lockstep. So effectively, if the revenue goes up, EBITDA should go up, net earnings should go up.
Could you talk about where your revenues, where they came from? You've been a West African driller for your kind of history, and last year you expanded out into Egypt and Peru. How much impact did those regions make on your results this year, and how much should we kind of expect for them in next year or this? Sorry, how much impact did they make last year, and how much should we expect for this coming year and beyond?
So that's the real story, because our investors for some time have been encouraging us to move up and move up, and we move up and move out. And we essentially, our move into Egypt and into Peru is really in search of a country commodity diversification play. So at this point in time, I would say those markets are still in the early stages, effectively in their infancy. The majority of our business came from our normal bread and butter business, which is the West African business. And so anything that as Egypt and Peru begin to grow, they will show up more significantly on our radar. But to answer your question, and I'm sorry for that long-winded digression, single digits at this point in time.
Single digits of millions of revenues, or of single digit growth, or single digit?
No, in terms of percentage of business. So I think,
okay.
I think Peru put in a couple of percent, and I think Egypt might have only put on 1% because we really only got started in the back half. So these are markets that are essentially in their infancy, and yet after just our first quarter of drilling in Egypt, we have successfully landed a new contract, a $54 million contract, the largest contract ever signed in the history of this company. And that will serve us very well for the next 5 years. So too early to say what that all looks like, other than the fact that it's obviously good news. And I think when we're looking at Egypt in a couple of years' time, it's going to feature much more significantly on our radar. I'll give you a quick example. Wind the clock back 5 years ago, and Cote d'Ivoire for us was 6% of our business. Today, it's 42% of our business. You see my point? And so why are we in Egypt? Because we believe in that market. They've recently introduced economic reform, and they're going to kickstart things through the mining industry. And that's good. So, there's a lot to like about Egypt for us at the moment, and it's off to a great start. South America is a different thing. It's an EV play for us. We're very, very, heavily biased towards gold, and we need to introduce some commodity diversification. And so in South America, we didn't go chasing gold business. We've got plenty of that out here. In South America, we're drilling for EV metals. And we like EV metals, and we believe that this is the way of the future. And so that's going very well for us at the moment. We have 4 rigs there. We started with 3, very encouraged by what we're seeing, and we believe in copper. We believe in zinc. We believe in lithium. We believe in all those things. And so we've added a rig in pure speculation. The amount of bidding that's going on in South America at the moment, we know we're going to pull off something very soon.
So you've got 4 rigs in South America. How many rigs do you have in Egypt?
We started in Egypt with 2 rigs, and that was in the back half of 2021. We've now secured a 5-rig job, and we have ordered 5 rigs for that program. One of which has just arrived and started drilling yesterday, I believe, and another one which is arriving next week. So the answer to your question is, as of today, we have 3 rigs in Egypt, and this will move very quickly up to 7 rigs. And when you can, 7 rigs of a 71 rig outfit is 10% of our fleet. So it's going to move very quickly, and it will begin to show up quite significantly on our radar in this current year, but more so next year.
Okay. And so that $50 million Egyptian contract, that's over 5 years. Is it sort of a little slower this year, maybe 5 million of revenue this year, and then it goes up to 12 the subsequent years, or how is it sort of spread out?
Yeah, I think we'll probably end up with. I think your numbers are spot on there. I think we'll probably do 5 million this year, and we will do probably 10 in the subsequent years.
Okay. All right. And then you have announced $130 million of new drill contracts. What's the duration of those? Is that like a 3 to 5 year duration of that sort of basket of drill contracts where it'll be spread out over?
So the Egypt contract is for 5 years.
Yeah.
The other 2 significant contracts that we've signed, they are for a duration of 2 years.
Okay.
So we have an hour. Yep.
Okay. All right. So that's a good thing. Another thing, reading the financials is in 2020, you guys did $7.5 million of CapEx. Last year, you did $15 million of CapEx. So I presume that's mostly buying new drills. and maybe some maintenance and upgrades on mills and so forth. Can you talk, and what are your plans this year? Are we going to see sort of continuing growth on the CapEx side, which is going to drive future business, I guess?
Yeah, so we have a very heavy CapEx program for this year. So it's increasing again. And for the last 3 years, we've been increasing our CapEx budgets, and evidently it's delivering us the results. So we will continue to grow our fleet through this upcycle. And as we go deeper into the upcycle, we will continue to reinvest in the business. If we look at how the model we've got a slide on it as we move forward, but if we look at how the business has grown from its first rig in 1998, or 24 years ago, we have been reinvesting the cash generated from operations back into the business. In fact, I'll just move to that slide if you don't mind, so that we know what we're talking about. There it is there. I mean, one rig, 1998, 24 years, 20% CAGR since inception. So as a publicly traded company, we obviously have shareholders. What's the best way to reward our shareholders? Well, we can buy the stock back, we can pay dividends, or we can just reinvest cash generated from operations back in the business. Clearly, what's working for us is putting our cash generated from operations back into the business, which drives the revenues. And if we can do that and maintain our EBITDA margins and our net earnings, our net income in lockstep, then that's a successful business model. I think really it's about getting the whole three on balance, though. It's, share buybacks when they matter, dividends, of course, but the real secret sauce here is just continually reinvesting in the Geodrill story from the cash generated from the operations. That graph that you're looking at is 100% organic growth.
And sorry, just to clarify, those are your rigs that you have deployed. So right now you've got 71 rigs you have in your inventory, correct?
In our fleet, our rig count closed 2021 at 71 rigs. Yeah.
Any estimate of how many rigs you expect to add in 2022?
7.
7 rigs. Okay.
At a minimum, it will be 7 rigs. It'll really depend on a number of factors. But at this point in time, conservatively, I believe we're going to end up somewhere around 79, 80 rigs.
Okay, that's almost 10%. That's off a bigger base. That's a lot of rigs.
Well, next year we'll probably do. You've got to remember we're entering an upcycle. This is a cyclical business. Yeah. So the investors need to be reminded of this constantly, is that that this industry goes from 5 years of feast to 5 years of famine. We have just come off a 7-year down cycle. And what we know about the cycles is that they are, either side of the parabolic, they're mirrored. So if we have 7 years of downside, we would normally have 7 years of upside. We're really 2 quarters into an upcycle. The good news here is that the industry has a lot to look forward to. Probably conservatively 5 years of upcycle. I believe actually that we're entering a super cycle. Just as I was coming on the call here today, I see gold's gone north of $2,050. If you believe that inflation is going to continue and we will end up in periods of stagflation, then there ain't no better hedge against that than gold. Gold has proven itself time and time again for thousands and thousands of years. And we drill mainly for gold. 95% of our drilling is gold.
Yeah, and you're expanding into South America, where the energy, the EV metals is there. And anyways, it's interesting as you go from a small focus company and you get bigger, you're diversifying your geographies, your metal exposures, and will become a much more sort of balanced, diversified company as you get bigger.
And as time goes on, where we would like to get to is less focus on gold, so that we've actually got that diversification. Gold is great now. Will it be in 5 years' time? Who knows? But I think the EV story is going to go on for a long time, and it's important that we capture a chunk of that market now, and that's going well for us. Lots to look forward to.
All right. Well, I think we've hit the high notes on the quarter. Anything else you want to add as we wrap things up here?
Not really. I think I'll just probably leave you with this thought-provoking slide. It's all the reasons why I'm sure investors should consider Geodrill. But currently, I'm sure I'm not the first CEO that sat on here on your program, talking to you in your lounge rooms or your offices or wherever, and said that this story is undervalued. But Geodrill trades at currently at 3 times EBITDA, and some of our peers, most of our peers, are trading well above that. If we just look at this graph alone, during the last upcycle, Geodrill traded on average between 4 and 5 times.
Thank you very much for taking the time, giving us an update on a very strong year. And yeah, I'm looking forward to getting updates as the company moves forward and we get some more quarters under the belt for this year. Thank you very much, and talk to you again soon.
Thank you. Cheers. Have a great day.